analysis. So we are going to explain, and we explain. Now we have analyzed the question. Now we are going to explain and show how it's going to reported in our financial statement. So now let's pick it after the other. And that's how question comes out. Now, the first thing is that we need to tell the examiner that the purchase of machine, let's pick it one after the other, is addressed by a standard, by a standard. What is a standard? IAS 16. The purchase, yes, you need to tell them that this machine is addressed by a standard called IAS 16. Let's use short form. Short form is PPE. PPE, property, plant, and equipment, and should be accounted for in line with IAS 16. With IAS 16. Now we are going to do two things. We will explain and we are going to show Abi. So what's the name of that organization? It's Gamma, right?
Yes, Gamma.
Gamma. So this is what we are going to open sheets. This is sheet 1. Let's open sheet 2 now. Sheet 2. So let's call it it's Gamma now. Gamma. Let's do it like this. Okay. Let me merge and center and increase the font little. So we are going to show the statement of profit or loss because they asked us to show it. Statement of profit or loss of Gamma. Profit or loss. Okay, Gamma. For the year ended. For the year ended. Which year? According to the requirement, is it September or October? The requirement. Is it September or October? The year ended or the year end of the business? Okay.
Oh, sorry, September 2025.
Okay. September
30th, 2025.
Okay. 30th, 20x5.
Yes.
Okay. So let me do like this. Let me just copy it and paste it here. So let me call this profit or loss. Statement of financial position. Because we have to show all these figures. How is it going to be shown in our financial position? Statement of financial position as at September 30th. Okay. So let's do it like this. Let's go this. Then let's go this. So now let's go. We are going to explain and we are going to. Now it should be accounted in line with IAS. Now we have already agreed that the cost of the PPE is the cost of the PPE was how much? Was 30 million, right?
Yes.
So now let's go now. Under the principle of IAS 16, the cost of the machinery is $30 million. Okay. Full stop. So as you are analyzing like this, we are like we are like any mark. That's how we are picking it. You know, the first thing we pick now is number one, Abby. We
Yes.
pick analysis number one. So we are
Yes.
going to be moving one after the other. We'll be moving one after the other. What does analysis number two says?
Delivery of the machine.
Delivery of the machine. So on which date? On 30th September,
30th
right?
November. 30th November 24.
30th November 20x4, right? So since we have told the examiner that the principle of under the principle, the delivery of the cost of the machine is is $30 million. You now tell him that as at date of delivery, not day we order it to. That is number one boost in this question. They gave us two dates. They gave us 1st of November. They gave us 30th of November. So 1st of November is not relevant. So under the principle of IES, the cost of machinery is 30 million as at the date of delivery, 30 November. Let me short it. We are not in exam mode because of the time. 20x4. Now that's full stop. Now let's continue. What's the next one? They said the next analysis is what?
Period of further development.
Yes, period of further development, which is how many months? From 1st of December to 30th.
4 months. Okay, 5
months. Is it 4 months or
5 months? 5 months.
5 months. So now we are now going to tell the examiner that this cost to, now let me ask the question, are we going to capitalize it or we are going to expense it? The cost of development and installation.
It should be capitalized.
It should be capitalized, right?
Yes.
Why?
It's part of the cost that is going to make it available for use.
Okay. Because without that cost, we cannot use that machine, right?
Yes.
So if we do not incur that cost, we are not going to use it. So under the principle of IAS 16, we have set the cost. So we can now say also the additional costs incurred for development and installation of how much? It's 60 million, right? $60 million.
Yeah, 60 million
is to be capitalized. As part of cost of the assets. Cost of the machinery. Let's use the machinery in line with IAS 16. It is IAS 16 that says that. In line with IAS 16. So IAS 16 says we are going to do what? That additional cost should be capitalized as part of cost of this asset. So the next item is what? The payment, Abby.
Payment was made on the 30th of June.
So now we don't need that one. Although what they are telling us is that period, under that period, from 1st 12 20x4 to 30x4, that was when they did what? They did the installation and development cost, right?
Yes.
So that information is now telling us that we didn't pay immediately. We didn't make that payment. We made that payment 2 months after. That was May and June. Because I think, yes, they gave us an information in the question that the supplier gave us 20 2 months credit period, right? If you remember
Yes.
very well.
Yes.
Yes. So the supplier give us 2 months. So if you add 2 months to your 30th for 20x5, is going to give us that 90. So 30 plus 60 is going to give us 90. That's why we made a payment of 90. So we can go on, right? So
Yeah.
the next information that we have is what? The next
Training
information.
was completed. Training was
Training,
completed
Abi.
15th. Yes.
So which training did we embark on?
Training
It's
on how
like
to
if
use the
I
machinery.
yes, training, Abi.
Yes.
Okay, we are now going to say additionally, the employee training costs. The employee training costs of how much? How much is the training cost?
1 million.
1 million, Abi. Yes. So the employee training cost of 1 million should also be capitalized. As part of the cost of the assets Now, the next item is what
31st
is
May 2005, they underwent inspection and certificate was issued
okay.
and payment was made $600,000.
So now my question is that training cost that we paid, that was to be capitalized. Okay, we have done that. Now,
Hello.
Okay, do you have a question?
Hello, sir.
The training cost.
Hello, sir.
Yes.
Talk on.
I can hear you. You can go on.
It's all right. I think let's go on. It's okay. Let's go on. Sorry, sir.
Okay. Now, let's look at this employee training cost. Should we capitalize it or expense it?
Capitalize.
We should capitalize it. Let's look at that information very well. After the installation of the machinery, the employee attended a training course to ensure they could operate the machine. So that information, we need to be very, very careful about it. I just remembered now. That training cost, when we are like doing the when we are like reading the standard, do you remember that there was no training cost? There was no training cost. When we are reading the cost of the asset, the purchase, the non-delivery, there was no training cost. So I just remember very well now that the testing costs, that's what I did. I remember it is the testing cost. So although that cost is somehow related to that, that machine. However, do you agree with me that the supplier is supports the supplier that came for installation and development? Do you agree with me that he is supposed to like train the staff? The cost of that training is supposed to be part of that 30 million we have spent. Do you remember?
Yeah.
Do you agree with me? Do you sense it?
Yeah, so it must have been inside the 30 million.
Exactly.
Because if they are not trained, they cannot use the machine.
When we call somebody that please come and install and make sure this thing is working. After installation, he is going to tell us now that this is how you are going to do it too, because he's a professional. So it doesn't make sense. After installation, that person has now gone. We now went and pay 1 million again to acquire training on that, how to use that asset. It does not make sense. So I mistook it for testing cost. It is testing cost that should be recognized. So if you look at our notes, the note I dropped, it is the testing cost. So the employee training of 1 million is let me change it now. Now will not be capitalized as part of the cost of the assets. These costs should be recognized as an expense. This cost should be recognized as an expense. Because if you look at it normally, how can we give somebody $30 million to come and install? And he's not going to tell us how we are going to use it. So that employee training cost is not to be capitalized. So I need to quickly correct that before we go. It should be recognized as an expense in the P&L account, in the profit or loss account. So full stop. So we can now go ahead now. Now, the cost of inspection, that's where we are going to. Inspection and certificate, right? That one is that one will be capitalized 100% now. We don't have a doubt about that. Abi?
Yes.
We don't have a doubt that because for us to for them to come to our office to inspect and do the necessary things, we need to so how much is it?
600,000.
600,000. So that cost, what's the cost? The cost of inspection. The cost of inspection and safety certificates. Safety certificates. Is to be recognized, is to be capitalized. Let's use capitalized as part of assets, as part of the machinery, as part of the machinery. So let's do it like this. The safety costs. How much is the safety cost? Of 600. Yes, 600,000 is to be capitalized as part of the cost of the. So let's move on. Now, after that, they give us an information. They give us an information. Then, what is the information? The information is that we acquired a loan, right? We acquired a loan. So, also, under the principle of IAS 23. IAS 23 is borrowing costs. Now, there is something I need to quickly show us on borrowing costs before we move on. Please, can you see my screen?
Yes, sir.
Yes.
Okay. So let me quickly, I need to present another thing in mind. I need to present something else here. Then we will now come back. I quickly draft a note on IAS 23 because it is very, very important. So now I think my screen is somehow big now. Or do I still need to enlarge it?
It's okay.
Okay. So now IAS 23. IAS 23 deals with borrowing costs. So I quickly need to just draft this note so that there will not be an issue. So borrowing costs, these are costs we incur when we borrow, Abi. So that's the definition. The interest and other costs incurred by an entity in connection of borrowing of funds. So, and what are the examples? The examples of borrowing costs are interest on bank overdraft and short-term and long-term loan, amortization of auxiliary costs in arrangement of borrowing, finance charge in respect of finance lease, exchange difference arising from foreign currency. Now, qualifying assets. Now, this is where IS 23 is going. That IS 23 defines qualifying assets as an asset that necessarily takes a substantial period of time to get ready for use. In an asset that before you use it, it will take substantial period of time for it to be ready. So my question is that this machinery we are talking about, does it qualify as a qualifying asset or not? That's my question. Does it qualify as a qualifying asset or not? Hello, are you too?
It
Yes.
was delivered, but it went through installation. So I'm
Yes.
not sure it qualifies. I think for borrowing costs, it should be asset that will take time to construct or something like that. Not something you can buy immediately and be delivered. If I'm wrong,
Yes.
I don't know.
Okay, yes, no problem. Any other person that can try? Any other person that can try? Mr. Folashade, Olaoye, Mr. Diola, Mr. Peter, Miss Clara, Miss Sharon, sorry. Any other try? Does this asset qualify as a qualifying asset?
I'm not very sure. So I don't.
You are not very sure too, right?
Okay. So for a borrowing cost to be capitalized, it has to, there are some conditions, and I think she mentioned one of the conditions. That means the asset we actually borrowed the money on should take some period before it's complete.
So my question is just that this machinery we are talking about, does it
Let me
qualify?
ask the question.
Yes, does it qualify as a qualifying asset? You know, if it is qualifying asset, that's when we can capitalize, right? In line with IAS 23, the borrowing we can capitalize the borrowing cost. But see, if it is not a qualifying asset, we are not going to capitalize. So please let's take note. We are not going to capitalize any asset. We are not going to capitalize any borrowing cost on non-qualifying asset. So my question is that this asset, is it a qualifying asset? When did we buy this asset? Please let's check. When did we buy this asset? When did we start buying it? Hello?
30th November. It was delivered 30th November 2004.
Now, after inspection, certificate issued, everything, when did they finish it? When was the certificate? When was it given?
Ready for use.
Yes.
It was
When
brought
was
into use 31st July 2025.
How many months is that? Something we buy from November. That's 6 months, right?
Thereabout.
That's 6 months. So
Yes.
with that information, that's the reason why I threw out that question. That although we buy that asset, we did not construct it. We buy the asset. When we bought the asset, does it qualify as a qualifying asset? So that's the reason why I am saying that this asset, though, does it qualify? So if you look at it very well, it qualifies. So it qualifies as a qualifying asset. It's not an asset we buy today and it was ready, let's say 1 month. Can you see that it was after 6 months? It was after 6 months. That's where we can get it ready. In fact, legally, we cannot use it until safety certificate comes out.
Yeah.
So it takes substantial period of time before it is ready for use. In this case, it was after 6 months. It was after 6 months. So this machinery qualifies as a what? It qualifies as a qualifying asset. So that is where I'm going. That's why I threw out that question. If in this question now we bought that machinery was purchased on 30th July, on 30th November, then 1st of December, 1 month, we have finished everything. We can say that is not a qualifying asset. But the definition says that necessarily takes substantial period of time after 6 months. In fact, they told us that as a result of economic uncertainty, the machine was not brought into use until, was it July or June? According to the information, was it July or June? They gave us one information that as a result of uncertainty. So that tells us that it took more than 6 months. So we can say it is qualifying asset. So this is where I'm going. In line with IAS 23, IAS 23 now said borrowing costs that are directly to acquisition, construction, or production. Can you see now? Acquisition, we acquire. Construction or production of a qualifying asset. That's the reason why I asked that question, that is it a qualifying asset? So that asset is a qualifying asset, is to be capitalized as part of the cost of the asset. This is what I actually need, and that's why I quickly draft out this note, so that if I did not bring out this note, there will be issue in this question. Now, other borrowing costs are to be recognized as an expense when it is incurred. That means other borrowing costs incurred on it is called non-qualifying assets. Asset that takes short period of time for you to complete, short period. Let's say less than 1 month or 1 month. That is non-qualifying asset. You are not going to capitalize any borrowing cost. So we have to expense it. Hope we get this, Abby. Hope everybody understand this now.
Yes, sir.
Okay. So now IAS 23 now tells us that when should we start capitalization? When should we start capitalization? So there are 3 instances when we are to be we will start capitalizing our borrowing costs. Number 1 is when expenditure on the asset commences. When expenditure on the asset commences. Number 2, when borrowing costs are being incurred. Then number 3, activities necessary to prepare the assets are in progress. So when these 3 criteria are met, or when one of them are met, we are going to do what? We are going to commence capitalization of borrowing costs. When expenditure of the assets commences, that means when we start incurring expenses on that asset, on that machinery, that is when you start your capitalization. Then borrowing cost is being incurred. That means when you have acquired loan. Then activities. Now, cessation of capitalization. In line with IAS 23, there are 3 key things here. Let's say 3 or 4. Number 1 is a qualifying asset. That asset you are talking about, is it a qualifying asset? Number 2, recognition of qualifying asset. Is it to be capitalized or expense? You need to take note of it. Number 3, commencement of capitalization. Number 4, cessation of capitalization. Commencement of capitalization and cessation of capitalization. It is those 4 things, because IAS 23 is a short standard. In fact, you just need it in final level as a result of PPE and investment property. It's not something that you are not going to be spending like so many time on. You are not reading IAS 23. It's a small standard. So it's a small standard. So we are fine with that, right? We are fine with that. I think we are all fine with that. So now let's leave IAS. Yes, let's leave IAS 23. Let's go. let's continue our question. Let's go back to our question. Our time is going. So let's go back to our Excel now. Let's go back to our Excel.
Mr. Taufik,
Yes, ma'am.
sorry, sir. This substantial period, it's kind of subjective.
Exactly.
So,
God bless you, ma'am. It depends. In fact, if not because of that, I'm not the one taking you from skill level. If one of you have, or any of you, like, witness when I took IS 23 in skill level, because IS 23 is in skill level full time. IS 23 is more detailed. It's just the summary is what I just composed for you. In line with IS 23, the standard says that qualifying period, that substantial period depends on the accounting policy of an organization. And that's what you want to say now, right?
yes. I
Eh,
think you're right because
yes,
having 6 months, 3 months, 2 months is subjective.
exactly.
It's
Yes.
not
So,
defined.
yeah, that substantial period of time, if you look at it, is depends on the organization. But in context of this question, when you look at it, you just look at it, you say, okay, yes, I think it takes substantial, because something we have bought since November is until June or July. That's when we can use it. So it's not a short period of time now, and that is this instance. So, but the standard says it that it is subjective. It depends on the organization. You can say the period in which you are using to do your thing now is different from my own. So that's just it. So can we move ahead?
Yes, I'm
Can we go
fine.
ahead?
Thank you, sir. Yes, thank
Okay,
you,
okay.
sir. Yes, sir.
All right, ma'am. So now let's move on to our, now we are in our borrowing cost, Abi. The company acquired a loan. And under the principle of IAS 23, borrowing cost, let me just quickly, borrowing cost, okay, my cap log is on. Borrowing costs and qualifying capital expenditure, unqualifying capital expenditure, or qualifying assets, sorry. Qualifying assets should be capitalized. And included as cost of the assets. Cost of the machinery in this instance now. Of the machinery. Now we have made mention of the requirement of the standard, right? Now the standard now also says that the costs that are eligible for capitalization is when. So I need to quickly put this down. The costs eligible for capitalization. You know, they told us, they gave us an information in the question that the so thing, the loan is available for 12 months. If you remember that loan is 12 months. However, the standard is now saying, where did you use this loan for? That is the qualifying period. That is qualifying period. But please I will explain it further. Don't worry. I will explain it further. So the cost eligible for capitalization is when the from the date, okay, it's not when, is from the date the expenditure was incurred. You remember that three things: commencement of capitalization from the date the expenditure was incurred and cessation. When the standard say we will cease the qualifying, we will cease the borrowing cost. The standard says is going to cease, and from the date expenditure was incurred and ending on the date the asset is available for use. The asset is available for use. Is this thing dancing? Please don't let it dance. Don't let it dance. Let me quickly explain this. Don't let it dance. Let me quickly explain this. There is a problem here. This IAS 23, and we don't have time. That we are not going to be treating IAS 23 again. But I look at my screen now. Commencement of capitalization. Now, this is what the standard is saying. Now, I want to buy a machinery. The machinery will take substantial period of time for me to use. I bought that machinery, example, January 1, 2024. Now, it's going to, like, the use of machinery is going to take period of time. That means there will be a testing course, there will be an installation just like this. So now the standard is now saying that because you went to go and collect loan now, it's not that you go and capitalize all the borrowing costs from beginning to the end, though. The standard is now saying you are going to capitalize when you incur the expenses on the assets. When you incur the expenses on the assets, that means when did we buy that machinery? That is this number one. When did we buy this asset? I think it is 30th November, Abby. That is when we buy the asset. Until when it ceases, this is it. Capitalization ceases when it is ready for use. When was this machinery ready for use?
31st July.
Is it July or May?
July.
July, Abby. Because of what? Because of the uncertainty, Abby.
Yes.
Because of the uncertainty. But originally, when does the machinery available? When?
It was supposed to be May.
God bless
But
you.
it was
Man.
not brought into use until July 31st.
Exactly. That's why IAS 23 is now saying that that one no concern me. That one no concern me because of economic uncertainty. The asset is now brought into use as at 31st July. No, IAS 23 saying that one does not concern me. And that is the reason why it is here. They said capitalization ceases when the asset is available for its use, whether or not it is not being used, or when there is no active construction. Hope you get that instance. Capitalization ceases. That means you will not capitalize any borrowing cost after when it is available for use. So in this question now, capitalization will stop on 31st May when they issue out that safety certificate. You know, legally we cannot use that certificate. We cannot use that machine unless they give us certificate. Do you agree with me? Hello, everybody. Do you agree with me that without that certificate, you know, we are not legally we cannot use that machine if they don't issue out that certificate to us? So since they have done what? Since they have given us the certificate that now you can use, what IAS 23 is now saying that Immediately you are able to use it, your capitalization should stop. Because that capitalization is like a relief to you. It's like an income. That borrowing cost that you're supposed to expense. Do you know that when you expense something, it will be reducing your profit? Do you know? When you expense a material or an item, it's supposed to be reducing your profit. But IAS 23 is now telling you, please, during this period, because you incur these costs on this machine, please capitalize it. So you take it to your assets, you take it to your balance sheet, so it will not touch your profit. Because when you expense an item, it will be reducing your profit. So IAS 23 is like a relief standard. It is giving company relief. Hope you guys are still getting what I'm saying.
Please, can you say it again? Can you say it again?
Okay. What IAS 23 is doing that? IAS 23 is giving you relief. You are constructing an asset or you buy an asset. That asset, instead of you to buy it outright, you now collected a loan. You know you will incur an interest cost, which is a finance cost, which is borrowing cost. That borrowing cost, like originally, you're supposed to expense it. You're supposed to take it to your P&L. And anything you take it to your P&L as an expense, it will be reducing your profit. Any expense cost will be reducing your profit. So IAS 23 now say, as a result of this borrowing cost you incur, is as a result of this machine. And this machine is going to produce economic benefit for you. So please capitalize it. It's like a relief for you. Capitalize it. However, there is restriction on the capitalization, and that is why they gave us cessation of capitalization. That when it is ready for you, so please stop capitalization. Whether or not it is being used, whether it is being available, whether the management of the organization want to now start using it or not, that one does not concern IAS 23. IAS 23 says when it is available for use. So in this question, the asset is available for use as at 31st May 20x5 when they gave us the certificate. You know, okay, let me ask you a question. Why are they giving us certificates? Why are they giving us certificates? Why did they come for an inspection and giving us certificates? Why?
To confirm that it's ready for use.
God bless you. That is it. That is it. That thing, God bless you, man. God bless every one of you. That is it. They gave us certificate. You can now start using it because it is safe for the environment and you can start using it. So that is why IAS 23 is saying that immediately it is available for use. Let me highlight it in case when you are reading on your own. Let me highlight it. When it is available for use, please stop capitalization. That relief that I'm giving you, please stop it. So I hope everybody now gets it now.
Yeah, so when we stop it in the sense that, okay, we've already capitalized it in our fixed asset register. When we're now stopping it, is it that we'll now de-recognize it again, or how do we want to do it?
Now,
if I
when
say
you stop
it is 90 million before, will I now go back and say it is no more 90 million? How do I take it out of the cost?
No. Our bone of contention here is the borrowing cost, which is the interest cost. In the interest cost in this instance is what? Is 4%. 4% of 90 million. That 90 million is the loan amount. That one is going to your balance sheet. It's going as a loan. It's going as a short-term loan or long-term loan. We don't have a business with that one. Yes. Our own problem, our own business is that interest cost, that 4%. You know, 4% of 90 million, we know we calculate it. So it's either we take it our P&L or we capitalize it. So standard says we should capitalize. Please capitalize it. It is like a relief for you. Please don't take it to your expense. However, there is a restriction. When it is ready for you, stop. So what they are saying here is that immediately when it is 1st of June, you know, the asset is available as at 31st of May, Abi. So immediately it is next day, you are not going to capitalize again. You will now be expensing it. So you will now be expensing it. We are going to show you our POL. You know, I created sheet 2 for my Excel sheet, right? I'm going to show it in my POL. how
Okay.
it's going to be shown. Yes, so you understand better. Yes. So can we move on now? Can we go on now? Can we move on?
Yes.
Okay, now let's move on. Let's move on. Our time is going. So now, under the principle of IAS 23, so the costs are eligible for capitalization. The cost eligible for capitalization is okay when it's available for use now. So now let's go to the next line. Let's say in this case, comma, in this case, the relevant period. So what's the relevant period for our capitalization according to this question now? The relevant period, how many months are we going to capitalize? From when to when? From when to when? You know, we have agreed that cessation of capitalization is 31st May. Abi, when are we going to start capitalizing? Is it 1st of November or 30th of November? Hello.
Hi.
Oh, are you now sleeping? Eh? We are not in the night now. That's
Please
why I
come
say
again, sir.
that's why I can never take all this calculation in the night because
Some of
people will
us, we don't
just
know
be
whether we are inside this time of the year.
voila. Don't worry. You know that I
I'm
said
telling
that.
you, me,
Yes.
you know what I call floating. I don't even understand
Yeah.
anything.
No, don't worry. You know, it's because you didn't start with us. So when you watch
Yes.
the record, when you are full, you start from from the beginning, you will get it. And that's why recording is makes sense. So when you now watch the recording, so any issue you now have, you can now send me a message in my DM. Okay, this place, so what is it? I will now expatiate. So there's no problem at all. There's no problem. So the question I'm asking here is that the relevant period for capitalization, that when should we capitalize in line with our year 16 is when? Is from when? From 30th 11 20x4. That's when we incur expenses. When we buy that machinery. Do we remember very well? To the date the asset is ready for use. You know, we said it now that IAS 23 said when it is ready for use, so we should stop capitalization. This capitalization is like a relief. So 31st May 20x5. So how many months is this? How many months? How many months?
You mean from November to 31st May?
Yes. I think it's 6 months. 6 months.
6 months.
Yes, it's 6 months. So we have December 1 month, January 2 months, February, March, April, December, January, February, March, April, May. So it is 6 months. So that is the period for capitalization. That's the period for capitalization. And the relevant borrowing costs. The relevant borrowing costs. The relevant borrowing costs is, now let's calculate. Let's calculate our borrowing costs. How much is our loan? The loan we collected is $90 million, right?
Yes.
How much is the interest we are supposed to be paying? 4%.
4%.
Then multiplied by how many months does IAS 23 say we should capitalize? 6 months. So you now be 6/12. Although that loan is 12 months, you know they told us that loan is 12 months. But IAS 23 will now tell you that no, I'm not going to give you 12 months. Stop capitalization when it is available for use. So it is May 31st, 20x5. That's when capitalization stops. So when we press calculator, please, who is with calculator?
Please, are you showing your Excel? Because
I'm
I'm
showing
seeing
my
borrowing cost. I'm seeing borrowing cost here.
Where?
I'm the only one.
Where?
So, what document that is showing?
Yes,
The
recognition of
Excel is
borrowing.
not showing.
I don't get. Sorry. Where?
We
Okay.
are not seeing your
Your
Excel.
Excel document is not
Sorry.
showing.
I've not switched screen. Sorry. I'm still in. I'm not in Excel, oh. So, but I've not switched screen. Sorry. You are going to see my screen now. So now let's continue now. So the relevant period for capitalization is 30th November 20x4 to 31st May 20x5, which is 6 months. Then the relevant borrowing cost is 4% of 90 million is how much? Please, can you help me? I think that's
3.6.
3.6 million, right?
Yes.
Times 6/12 times 1/2. I think that's 1.8.
1.8.
So I think that's 1.8 million.
Yes.
So our borrowing cost to be capitalized is 1.8 million. So we can stop that. We can say full stop. So that's it. So any other thing again now, the only information we have now, they said the estimated useful life of the machinery is 10 years, Abi. Why the engine is how much? Why the engine is how much? The engine replacement cost is 24 million, right? So now let's go now. What is our cost? Hence, let's go now. Hence, the cost of our machinery, the initial cost, let's call it initial cost of the machinery is how much? The initial cost of the machinery is, let's leave it like, let's do it like this. $90 million, right?
Yes.
90 million plus the one we capitalize. Which one did we capitalize? Number one, we capitalize. We expense training costs. We are not going to put training costs.
Yes.
Inspection and safety cost. How much is it?
600,000.
600, right?
Yes.
Okay. In fact, I want us to split this into 30 million.
30.
Then
Yes.
the second one, 60 million. In case when you are solving on your, when you are reading on your, it's not going to be dancing.
Okay.
So yes. So 600, Abi.
Yes.
Let me use 0.6 million. 0.6 million is 600,000.
Yes.
Sorry, my alarm for Salat. Okay, now we can continue. Yes. So 30 million. Which cost did we capitalize again?
1.8.
Which is our borrowing cost, right?
Yes.
So let's capitalize our borrowing costs. So when we add all these two together, it's going to give us what? Um, 90 plus 0.6 plus 1.8.
92.4.
Okay, thank you, ma'am.
Yes.
92.4 million.
Million.
So that's the initial cost of our machinery at the date of initial recognition. So now that's our initial cost. Now, for us to get our carrying amount, we need, you remember, we need to do what? We need to determine our depreciation. Please don't let us forget, because our depreciation minus costs is going to give us our carrying amount. So we at the end of the period, we will show our carrying amount in our balance sheet. So now let's go for our depreciation. So in line with IAS 16, can you quickly help me check? IAS 16 tell us that when are we going to start depreciation? Please. IAS 16 tell us, yes. When are we going to start our depreciation?
When it is available for use.
When it is available for use. As
Yes.
what? Now, in this question now, when is our machinery available for use?
July 2005.
July or June?
It was not brought into use until 31st July 2005.
Why was it not brought into use?
Of all the certificate and inspection.
No.
And the issues, there was an issue that was not mentioned. I don't know. One
They said
issue
economic uncertainty.
economic uncertainty.
So if you remember very well, the reason why we did not bring the machinery into use, is this as a result of our negligence, or is it a valid reason?
Yes, it is valid because we didn't cause it.
Really? Economic uncertainty. In line with IAS 16, the machinery is when it is available for use. When the asset is available for use, that's when we start depreciation. So that's the problem of this question sometimes. Sometimes we can make mistakes. So under the principle, don't let me use under the principle again, God. In line with IAS 16. In line with IAS 16, depreciation commences when the asset is available for use. When it is available. It is not when it is brought into use. When it is, because depreciation is like a fraud, though. Depreciation can be used to manipulate financial statements. So that is why the standard is giving us guidelines. Hello, are you still with me?
Yes.
Okay. Not that maybe I'm now on my own. No, that I'm on my own. You're on your own. No. Please don't let me be on my own. No. So the depreciation commences when the asset is available for use. When the asset is available. When it's available for use, when it's available already. Okay, let me use it. Available already for use. That is 1st of July. That's when it is available. 30th May 20x5. Now, rather than when it was brought into use. So they told us now rather than when it was brought into use. So there are some bad in the question that they are just putting it there to like confuse somebody. So our depreciation period is what? Our depreciation. Now let's quickly calculate our depreciation. How many months are we going to depreciate this asset? When is the accounting period end of the business? The accounting year end of the business, of this business. They said requirements. Miss Afolaṣade Abat.
Yes.
According to the requirements, yes. When did they say we should report this thing? As that
30th September. 30th September 2005.
Okay. So now our depreciation now. Let me put it. Therefore, comma, our depreciation is our depreciation is how many months from the date it is available for use. I think it is 1st of July, 1st of June, July, August, September. That is 4 months. So our depreciation period is 4 months. Please are we with me? Tell me
I'm with
please if
you. I'm with you. But that June, I'm confused about that June because
when
payment
it
was
is
made 30th of June.
that payment, we don't need that payment too.
Yes.
Please, Mr.
So
Bolashade, please
they
don't
said
touch that.
until it was not brought into use until 31st July.
Yes,
So
that's
that's how
what
I'm
the standard.
confused.
Please,
31st July, ending of July.
yes, the standard is telling us that we should not worry when it was brought into use, when it was available. So the asset was available when? On 31st May, right? So on
Yes.
31st May 20x5.
But that was when it went for inspection. On 31st May, the machine underwent a government inspection and safety certificate was issued on that
Yes,
31st of May.
yes, that is when it was issued. So that date gone is when it is available for use. Hope you understand now. That
Okay.
date when certificate was issued, that is when it was available for use.
All right.
Yes, that is so 30th September, right? So our
Yes.
depreciation in year one, our year one depreciation, we supposed to be 12 months. It's not 12 months though, it is 4 months. That means from 31st of May till the accounting year end of the business. Accounting year end of the business, which is 4 months. So our depreciation, and when we are calculating depreciation, we will divide it by 4/12 because it is 4 month depreciation. It is not 12 month depreciation, no. So
Yes.
that is what I'm explaining here. So Miss Sharon, don't worry. When you relax very well, now carry it again because this is where ICANN is now going now. This one is not
Okay.
corporate reporting again. This is SBR. So all these questions is what they will be sending. There will be all the testing question on ACCA. So we have to
Okay.
like calm down and get it. If you have any issue, when you are with it, just message me. Or when I get home in the night, you can give me a call. We can talk about it for like 5 to 10 minutes. So it's not something we
I will
don't know about.
appreciate that, please. Thank you so
Yeah,
much.
no problem.
Thank
No problem. Don't worry. I think we are almost done. Our depreciation period is um our depreciation period is 4 months, right? Now we are fine with that. So the last thing we are dealing with is our componentization, right? So let's
Yes.
discuss our componentization. So let's tell the examiner, since the engine, the useful life of the engine is okay.
5 years.
Okay. Also, in line with IES, in line with IES 16, we need to tell the examiner that the engine should be depreciated. The engine, okay, line with IES 16, since the machinery is a complex asset. Let's tell the examiner, since the machinery is a complex asset, is a complex asset or composite asset, anyone. Since it is a complex asset, the components, the engine, yes, the engine should be depreciated, oh shit, for 5 years, and other components other components will be depreciated for how many years?
10 years.
Yes, thank you. So the other component will be depreciated for 10 years. So we just need to tell examiner like that. So in this case, can we quickly calculate the depreciation? Let's calculate the depreciation and let's finish up this question. So the depreciation of the engine, okay, the depreciation of the engine is how much? Let's calculate. How much is the cost of replacement of that engine? 24 million, right?
Currently 24 million.
Yes. How many years is it going to use? 5 years.
5 years.
Yes. Now multiply by, don't let us forget, our depreciation is 4/12, and that's the reason why I quickly explained that formula. When our asset is available for use, which is 31st May 20x5, till accounting year end of the business, 30th September. So if you help me press calculator, please, how much is it?
1.6.
1.6, right? Is it 1.6?
Yeah, I think.
Yes, 1.6.
Okay, then. Okay, thank you. Thank you, ma'am. 1.6 million. Okay. And the depreciation of the engine is 1.6, and the other component. Let's calculate the depreciation of other components too. And the depreciation, time is going on, of the other components is now other components. How much are you?
2.2. 2.2.
2.2. Where did we get our 2.2?
So the balance, that's 90 million minus 24. I got the balance divided by 10 years, then multiply by 4 divided by 12.
Please, let's get it one after the other. How much is the cost of that machine? The initial cost of that machine, yes.
90 million.
90 million, Abi. No, yeah. we have capitalized some assets. Don't let us forget to.
Oh, yeah.
Do you remember that we have capitalized, which is 92? The total cost of that machine is
92.4.
4. So the total cost is 92.4, right?
Yes.
Now, out of it, we have how much? We have
24.
We have 24.
Yes.
Of the engine, Abi.
Yes.
We have 24 of engine. So when we 92 minus
68.4.
Okay, which is, let's do it like this. 68.4
divided by 10.
Okay, divided by 10 years.
6.84.
Multiplied by also 4/12. Do we remember?
Yeah, that's 2.28.
That's 2.28, right?
Yes.
Okay. Let's put it like this. 2.28. 2.28. So our depreciation, we are done with our depreciation. So now let's get our total depreciation. Let's get our total depreciation. Then, therefore, our total depreciation that will be recognized in our P or L. Total depreciation is how much?
3.88.
Okay, 3.86 Abi.
88. 3.88.
Okay, that is 1.6 plus
2.28.
2.28. Okay, that's it. That's our total depreciation. So that's our total depreciation. Now we can get and let me do it like this. Now let's get our carrying amount. Let's get our carrying amount. What is our carrying amount? The carrying amount
92.4 minus
carrying amount of our the carrying amount of our machinery, right?
yes.
She
92.4 minus 3.88.
okay, which is
88.52.
okay, 92.4, right?
Yes.
92.4 minus
It's 3.88.
yes, 3.88.
It's
So
88.52.
88.52
0.52.
million. So that's our carrying amount as at. So we have gotten our depreciation, we have gotten this, we have gotten that. So what do we have more? We don't have anything again. The only thing we have is our finance cost. Our finance cost. How much is our finance cost? We have capitalized one. The one we do not capitalize. Our finance cost is the same thing as borrowing cost too. Please don't let us forget to. Our finance cost on loan
1.8.
1.8 million, Abi. The one we capitalize. How much was the one we capitalize? Let's take it one after the other, please. Now, when did we do out this loan? This loan. When was this loan available? Let me check here. The loan was available
November 1.
On November 1, Abi.
Yes.
And the loan was for how many months?
12 months.
So, in our financial statement, the interest cost we are going to pay, is for how many months? Is it that 12 months or less than 12 months? From November, December, January, February, March, April, May, June, July, August, September, October. Our okay, this is it. So our finance costs on loan is actually 11 months, not up to 12 months. It's not up to 12 months. So the repayment of the loan, look at it. The repayment of the loan was repaid on 31st October 20x. So as at 31st October, is going to be 12 months. So
Yeah.
finance cost on loan is it's okay. It's available. Okay. It's expected to be paid. It's expected to be paid from 1st of November 01 11 20 x4 to 30 10 20 x5. That is the 12 months. We are supposed to pay this loan for 12 months. We know we capitalize only 6 months. We don't have a problem with that one. So this loan is supposed to be paid for 12 months. However, the accounting year end of the company, the accounting year end is September 30, 20x5. September 30th, 20x5. Therefore, the loan payment amount is 12 months. It's not up to 11 months. It's 11 months, sorry. It's 11 months. So when we calculate our finance cost now, finance cost is, let me just leave it like this. How much do we collect? 90 people. This question, ACC is not for the week, not for the week. Times 4% times 11 months. So we pay that loan for 11 months. It's not up to 12 months. So how much is it? 90 million times 4% times 11 is 3.3 million.
$3.3.
Yes. Abi, it's 3.3.
Yes.
Yes. Now, the finance cost to be expensed now, and that is why we are calculating this. The finance cost to be expensed is this 3.3 million. This 3.3 million is the total finance cost we are supposed to pay. The total finance cost supposed to pay is 3.3 million minus IAS 23 say we should capitalize. We should capitalize how much? We should capitalize 1.8. The one we capitalize then. So 3.3 minus 1.8 is how much?
1.5.
Okay.
1.5.
1.5 million. So the finance cost to be expensed is 1.5 million in our P&L account, in our profit or loss account. So what I did in this last paragraph is that I calculated the finance cost we are supposed to pay. We collected loan on 1st November 20x4, and it is for 12 months. So if you count 12 months to 1st November 20x4, it's supposed to be 31st October 20x5. However, our accounting period is September, 1 month before. So it's 11 months. So out of that 11 months, which is 3.3, IAS 23 say we should capitalize 1.8. So you deduct it from that 3.3, you get 1.5. So that 1.5 is the one that is going to P&L as an expense. So that is it.
Sorry, sir. What happened to the last month? The interest on the last month? Are we not supposed to pay that too?
It has entered new year. It has entered another accounting year. You remember that according to our requirements, the accounting year of the business is 30th September. It is not 31st October. So if it is 31st October, it will be 12 months. But since it is 30th September, 1 month before that period, before our accounting period, so it is 11 months. So that's the reason why it is 11 months. From November to October, 12 months. But our accounting period is September, because we need to report our financial statement as at 30th September. So that is why it is 11 months. So we capitalize 1.8. So you deduct 1.8 from me, then that is it. So that is it. That is it. That's the last thing we do. Then the closing balance of the loan. The closing balance of the loan is 93.3 million. Sorry, excuse me. That means 90 million that we collected plus the interest we are going to pay for 1 year. This is going to be reported in our as current liability or non-current liability, as the case may be. And that's all. That's all. ACCA. So
The question is wicked.
like, and that's what they are testing. That's what they are setting. And in ACCA, there is no 5 question answer 7. It's answer all. It's answer all. It's answer all. So in our P&L account, let me just do it like this. We are reporting in dollars. We will show our depreciation. I think we can all finish this one up by ourselves. Or I can finish it up, then I will send the Excel in the before. I don't want this thing to be very long. We need to report our depreciation. How much is our depreciation? We will go to our balance sheet, we pick it, we put it here. What is inside our P&L again? Okay. This is how we are going to do it. We call this one expense. Let's call it operating expense. And that is why we are professional now. This is a real life question. They are saying we should show it how we are supposed to recognize it, and this is it. So we just prepare our depreciation, we show it, then we have employee training. Employee training that we incur, that 1 million. Do you remember that we expense?
Yeah, 1 million.
That is coming here. We will expense it here. And that's what they are saying. You should explain and show. Our depreciation, there is no time. Then our finance costs that we just calculated now, that's 1.5 if I can remember very well. Now let me pick my depreciation once and for all. The total depreciation is how much? The total depreciation. Therefore, our total depreciation is 3.8. 3.88. That's our total depreciation. Just come here, just bring it here. 3.88. So any expenses again that we're supposed to recognize here, I think that's all. We have recognized depreciation, we have recognized finance costs, we have recognized employee training costs. That's all. What do we need to recognize again? We now go to our P&L, our statement of financial position. You just put your dollar sign here because of the reporting currencies, dollars. So we go to our non-current assets section. Our non-current assets section. Non-current assets. You just show it here. Our machinery, PPE, right? Is a PPE. You can put it in brackets, machinery. Machinery. So all we need to do here is what? Is to show the carrying amount. You know, we have calculated the carrying amount. The carrying amount of the machinery is here. Abi, 88.52. Look at it. We have calculated, you just come here. PPE, 88.52. What do we have again? We don't have anything again. We have recognized our finance costs. We have what do we recognize? Loan.
Loan.
Yes, we just come here. That loan, help me check, Mrs. Papola Shade. Is that a long-term loan? What is the type? What is the loan? What is the name of that loan? Let's decide. Maybe it's a long-term loan.
Short term. It's supposed to be 1 year.
No, that loan, that amount of loan is not that non-current lab, that loan that we acquire. What is the name of that loan? Is it a bank loan? I think it is like preferential loan or something now. Oh, I don't want to share my screen again now.
Hold on, let me check.
Yes, the name of that loan, go. So
Yes,
I will know maybe it's current.
Preferential loan. Loan.
So it's a preferential loan, Abi. So let's call it preferential loan. That preferential loan. And when we calculated it, it was 93.3, right? I think it was 93.3. This is it. The last one we calculated, the closing balance of the loan. And it's not a current liability. Non-current liability. It's a non-current liability. So I think we are fine now. We have shown our loan. We have shown everything. We have shown our finance costs. We have shown our loan balance. We have shown our PPE, the carrying amount. We have calculated our total depreciation. Abi, we have calculated everything. I think we are fine now. So this is our financial statement extract. This is what they say we should do. Operating expense, depreciation, employee training, finance costs. So that is it. So this is where the question. This question is a 15 marks question. So imagine, how do you want to finish this one? So this is it. Let me save it. I'll just save it and send it to your group. I'll send it to your group now. Let me save it. Please don't close it. So let me stop the recording now. So don't let me ask any question again this night. Miss Sharon, Miss Afolashade Olaoye, please, when you are just, and Miss Abat, Miss Afolashade Abat, so please, when you are free and when you are like, you want to carry it once again, just make sure you watch the recording. And that is what I just did now. Let me even see what I'm doing. To make it easy, I also stream it on YouTube. I stream it on my YouTube channel. I think it will be easy like that for you guys. So I'll just send you the YouTube link. You can watch it instead of downloading. Or which one is better? Which one is better?
Both of them are good.
I think that one is better. I will send you the meeting link. Then I'll send the meeting link. Then I'll send the recording. The recording is inside that folder. I'll save it in that folder. So I think that's fine. Then the streaming platform too is there. So
thank you, sir.
Yes, you are welcome. So just pick it up, take it one after the other. We have the question,